Today, we're diving into a Binance Research report that completely flips the script on how we should think about the crypto market. It argues that 2025 wasn't some kind of failure, but actually the critical setup for a huge shift in 2026. So let's get right into it. You know, for a lot of people, 2025 probably felt kind of weird, right? There wasn't that epic, explosive bull run everyone was hoping for. So it's a fair question to ask. Was it all just a lost year? Well, according to this research, the answer is a hard no. And here's the big idea, the core of the whole thing. 2025 was never about the price charts. It was about building the structure underneath. Think of it like this. You can't build a skyscraper without first spending a ton of time on the foundation. It's the messy, unglamorous work, but it's absolutely what makes everything else possible. I mean, let's be real, the market was a pretty wild ride. We had insane volatility and just a ton of uncertainty. You had everything from politics and tariffs messing with things to the massive hype around AI sucking all the air out of the room, plus a few economic shocks just for good measure. It felt chaotic, so it's no wonder a lot of us were left scratching our heads. Okay, but while all that noise was happening on the surface, something really important was going on behind the scenes. Three powerful forces were starting to line up. The report calls it the policy trifecta. And honestly, it's the key to understanding why 2026 could look completely different. So what is this trifecta exactly? Well, first, you had governments pumping a ton of cash into the system through things like tax refunds. Second, central banks started easing up, lowering interest rates and making money cheaper to borrow. And third, and this is the absolute game changer for crypto, we finally started getting clear regulations. So you've got more money, cheaper money, and clear rules. That is a powerful combination for risk assets like crypto. Now, this new environment didn't just lift the whole market. It fundamentally changed the role of the biggest player in the game, Bitcoin. What we saw in 2025 was the start of a massive identity shift for Bitcoin. And you can see that shift so clearly here. The old dream for Bitcoin was digital cash, something you'd use to buy a cup of coffee. But that's not what drove the market in 2025. The new Bitcoin is digital gold. The demand is now coming from ETFs, from big corporations putting it on their balance sheets, and from macro investors who see it as a hedge. It's basically graduated from a cool niche idea into a serious, globally recognized institutional asset. But Bitcoin wasn't the only one doing some growing up. While it was having this big identity shift, another corner of the crypto world was just quietly exploding. And that explosion can be summed up with this one number, almost 50%. So what is that? That was the growth rate of stablecoins. They were the undisputed success story of the year, no question. We're talking about trillions of dollars in transactions, often moving way faster and cheaper than the old school banking system. This wasn't some small trend. This was a major breakout. So why the sudden boom? Well, it all comes back to that policy trifecta we talked about, especially the regulation part. New laws like the Genius Act in the US brought some much needed clarity. All of a sudden, stablecoins had to be fully backed and regularly audited. This made them way safer for everybody, and it transformed them from just a crypto trading tool into a legitimate piece of financial plumbing for the mainstream. And this whole maturing process wasn't just limited to the money assets like Bitcoin and stablecoins. The actual things being built on blockchains and the platforms themselves started to look a lot more like serious grown-up financial infrastructure. And a huge piece of this puzzle was the rise of real-world assets, or RWAs. To put it simply, this is about taking a real-life asset, like a US Treasury bond, and creating a digital token for it that lives on a blockchain. And this isn't some sci-fi concept. It was really starting to happen at scale in 2025. And this really gets to a massive change in attitude. For years, the big Wall Street firms were just kind of watching from the sidelines, curious but cautious. Now, they're actually in the game. They're tokenizing real assets and using blockchains to build brand new financial products. They're not just investing in crypto, they are building on it. At the same time, the underlying blockchains, the layer ones, also started to specialize. It stopped being about one chain winning everything. Ethereum really leaned into its role as the main development hub, pushing a lot of activity to its faster layer twos. Solana cemented its reputation as the king of speed and payments, and BNB Chain really carved out a niche for super fast trading and integrations with all these new real-world assets. Each one found its lane, becoming a specialized tool in the toolbox. So, all that foundational work in 2025, it brings us to today.
With this more structured, more mature market, what does that mean for 2026? What should we actually be keeping an eye on?
Well, the report points to a few huge trends. All that new liquidity we talked about could start flowing directly into crypto assets. We might even see governments start talking about holding Bitcoin in their official reserves. Stablecoins could go totally mainstream through simple banking apps, bringing in millions of new users. And those tokenized assets, they won't just be for trading. They could be used in day-to-day finance. We should also expect explosive growth in on-chain trading. And get this, even AI agents using crypto to pay for things, as institutions get really serious about backing projects with actual real revenue. And that right there is really the bottom line. It brings everything full circle. The big idea from this report is that crypto has graduated. It's finally moving beyond being just a speculative casino and is now being built into the bedrock of our future financial system. Which, of course, leaves us with one last massive question. The foundation has been poured, the plumbing has been installed, the whole structure is there. Is 2026 the year someone finally walks over and flips the switch?